Hey everybody, Boris Schlossberg from BKTraderFx. We're going to be talking today less about specific trades and more about general tactics of trading as 2008 rolls out, because I think this is very important for all of us to understand. The basic conflict in trading is that we're always taught to let our profits run and cut our losses short. But in fact, it's almost impossible to do because of something called retrace risk. As you can take a look, prices almost never go up or down in a straight line. They're always going up, then they're retracing, they're going down, they're retracing. They're doing all sorts of things in a zigzagging mode. And this makes it extraordinarily difficult to stay in a trade and bank profits because trades tend to always go back up on you. So the new thing that we're going to do this year in 2008 is we're going to go back to trading the two-lot method, mainly where the first target is going to be approximately 40 to 45 pips in the money. After that, we're going to move our trades to break even and then hope that we get those maybe 3 out of 10 time situations where you get continuation and an opportunity to truly let your profits run. There are a couple of advantages to doing this like this, mainly because once you bank a little bit of profit, a meaningful profit like 40, 45 pips, you've taken a tremendous amount of psychological pressure off the trade. Let me just give you an idea of what kind of psychological pressure can build if you don't do that. Here's a daily chart of dollar yen. Suppose you just went short over here at this price, 108.42 with a 110 stop. That's about 150 point stop, so on a 2-to-1 risk-reward ratio, which is what you're classically taught, you should be looking for about a 105 target. But in fact, of course, you're never going to get the 105 target. Prices do move in your direction. They move down to 108, 107.54, 107.22, close to 120 points in your direction, but then stop, reverse, and go the other way. And here's the real big problem. Let's suppose you went short here, right at this point, right? You had a 122 point profit, and then prices reversed, and you got stopped out right over here at 110. Psychologically, this isn't even a loss of about 150 points. This, in fact, is a loss of almost 300 points because you were actually net positive 122 and then became net negative 150 for a total 300 point loss. Most traders are simply unable to absorb these kind of losses continuously and stay in the game, which is why the two-lot method, even though it is perhaps not mathematically optimal, is psychologically proper. And that's one of the reasons why we're going to be doing it for the rest of the year. As I said, most of the trades we're going to be doing are about 40 to 45 points in the money on the first target. Then we're going to sell half and go to break even. And there'll be exceptions to the rule. For example, with maybe euro pound. Euro pound is not a pair that's so active, and probably will have a 25 point target in those pairs. We'll always be giving you instructions. We'll always be giving you directions. And hopefully this procedure will really help to give us better pippage as we move into 2008, and everybody will enjoy it a lot more. Additionally, I want everybody to come and join us this week because I'll be revealing my news reactive trading with one absolute key ingredient that turns most news reactive trades into positive trades versus negative ones that very few people understand. So I hope you join us this week at BKTraderFx. We have lots of new information. Kathy's event risk calendar will be posting. We're back from vacation. We're ready to go, and we're ready to kill it 2008 in the FX market. Wishing you all the best and a happy new year. Boris Schlossberg for BKT, over and out.